Hello guys, it's your fellow investor here with another video. Today we're gonna have a look at a SPAC, something what hasn't been on my channel for some time, and this is a great opportunity to bring it back because I think this could be really safe play. I'm going to be talking about a company called TPG Paystack Opportunities with ticker symbol PACE. Right now they're only $12 a share, which is from my point of view super cheap. Just thinking objectively about SPACs, 99% of SPACs are worth way more and skyrocket after some initial news, but people weren't really paying attention to this stock, so it's quite on sale. And I like to bring it to you guys, even though I'm maybe one of the last persons to bring this up on YouTube. I've never heard of it myself before, so I thought why not give it a shot. If you like to see more under the radar stock picks or penny stocks, definitely subscribe to the channel so you don't miss out on any exclusive videos, and smash that like button for me so YouTube algorithm loves my video. With that being said, let's get into the breakdown. Let's say the stock price is $12 per share. When the market opens, you hop in, you have 20% downside on your investment and unlimited upside. I'll get to this more in the later of the video, but this is what I want to get out first, so you know that I'm not giving you any crap picks, crap stocks, that I'm serious when it comes to long-term investing. Now let's get into the news. So Nerdy is to become public company via business combination with TPG Paystack Opportunities. Transaction values Nerdy at $1.7 billion market capitalization, provides up to $750 million in cash proceeds, including a fully committed pipe of $150 million, forward purchase agreements of $150 million, and up to $450 million held in TPG Paystack Opportunities Trust account. So you can see the 1.7 billion market capitalization is not too shabby. And if we look back into the chart, we can see that current market capitalization is just $1.24 billion. So here we see almost 50% upside in the short term. But in the long term, it is unlimited. Existing investors including TCV, Learn Capital, Chan Zuckerberg Initiative, and existing management expected to retain a more than 50% ownership stake in the company. Nerdy to be listed on NICE following close expected early second quarter of 2021. So what we know already is that there are big names invested in this particular SPAC. The merger will happen in early second quarter of 2021, so within 2 months, let's say, the deal will go through and everyone will be happy, including us investors. If we scroll down, there's a lot of information which I encourage you to read through if you heard about Nerdy for the first time. I'll just go through this very quickly. That Nerdy has built a comprehensive online learning destination that enables the delivery of scaled, high-quality life learning for people of all ages across thousands of subjects and multiple learning formats. So they cover more than 3,000 subjects and includes one-on-one instruction, live small and large group classes, and adaptive self-studies tools. What I really love about this is that they are also using artificial intelligence and many handy features which other companies in the same niche don't use. And right now, during the Rona times, I know from my younger friends who are studying, let's say, high school or so, they're having big troubles with studying, that the teachers just don't give a damn about their education and they just give them tons of homework without really explaining the subject properly, or just give them the time they would at the school in person. So I can see definitely a big potential only from these fundamentals. But let's now move into their investor presentation so we get more in-depth details. Here we have again a transaction summary. We already know most of it, so I'll just highlight the thing we don't know yet. And that is, transaction summary represents an attractive entry multiplier of 7.5 times projected 2022 revenue of $198 million. You know, it's a really big amount of multiply. You know, 7.1 times is a lot. And if they can deliver it, it's going to be immense, huge, and it's going to explode and grow through the roof, but simply based on this fact. Here we have a little bit more of introduction, which is really important to look at. The SPAC company, the TPG, has already done a few IPOs or SPACs before, really big names such as Airbnb, Uber, or even McAfee. We can see that they have also investments in Box, Hotwire, or Spotify. So we know that they are a really experienced SPAC company. Here we have more in depth about investors and board. You can see TCV, Learn Capital, and Chan Zuckerberg Initiative. So this SPAC is kind of backed by Zuckerberg and his wife themselves, which is always nice to see when someone as educated and smart as Zuckerberg is actually interested in such a small company relatively compared to Facebook. There's a lot of information, but I'll just highlight something really what catches my eye, and that is that there's a large total addressable market, which is 1.3 trillion offline direct-to-consumer education market, and it's moving online quickly, and they're using artificial intelligence and machine learning platforms. Here is some numbers which they provide to us, that their annualized revenue for second half of 2020 is going to be $120 million. So they actually generated revenue. It's not some startup, they're not waiting, they are already there doing their business, which is always nice to see. Here we have just quickly shown on the charts how they estimate their growth, which is always good to see that there is actually average 45% CAGR. It's good to see, it's quite decent. We can see that they have some kind of matching layer, that they're selecting the best expert for the customer, so they get on really well, and it's pleasant experience for both of them. This is what we also love to see, that people are seriously satisfied with their experience using their services. We can see that there's a net promoter score, and Nerdy has 68, which is same as Netflix and better even than Amazon. And if you don't know what net promoter score is, or what does it even indicate, we can see that any net promoter score above 0 is good. It means that your audience is more loyal than not. Anything above 20 is considered favorable. The source of the NPS system suggests that above 50 is excellent and above 80 is world class. So if you look back here, Airbnb is the only one shifting towards the world class, but I would say around 70 is really decent, and you have seriously nothing to be ashamed of, and you can proudly present it to your customers or investors. Here we have what they do inside, what is happening, what they are all covering. It's a lot of things, and it's really good to see that they are not focused on one thing, but they can offer many possibilities for their customers. Here we have the competitive landscape. We can see that Nerdy is just really diversified, or they offer a lot of services than any of their competitors. And if we look at Czech stock, the Czech stock is worth over $100, and it offers less possibilities than Nerdy, and they're $13 billion valuation. So this really gives you a good look where this company could head and how successful they could be. We can also see clearer side here. They don't offer that much of service, just one type of service or two types of service, very small amount, very limited. And if you look at their stock, it's still worth over $20 and over $3 billion valuation. I hope you get the point I'm getting here. If you look at paid stock, it's $12, $1 billion valuation, and they offer they're on the same level as Czech, if not better. Before we get into their financials, let's have a look into their board member or management team. We can see they have big names, big companies such as Amazon, PAG, or Wills and Fargo. We can see that they're very experienced, but I would encourage you to go more deeper on that and look for yourself, do some background about each of them, most importantly their CEO, if they're not really shady. But since Nikola, it's been quite a pleasant experience with SPACs overall. Here we have their worst page, which is their financials. If we have a look, they aren't profitable, although it's getting better. We can see that they're planning to become profitable in 2023, so it's 2 years down the line, which is not the worst. But the most important thing that the company is actually generating revenue, they are successful, and they have planned to scale, and they have the opportunity to scale. So I don't really see this as an issue for us investors. There are plenty of unprofitable companies on the market doing fantastically well. Look at Palantir, they're just doing tremendously well. I can see this stock going to places. I went really quickly through their investor presentation because it has about 50 slides. It's a lot of information. I encourage you to go ahead, look it up yourself so you get the best information, all the information you need. Maybe do some more due diligence about their management team, but then you are quite set to go. I can see this stock doing incredibly well in current conditions in the next year or two, and it's a really good short-term investment, but I'm personally would be investing on it on Monday when the market opens, put a few $100 in there for long-term, because I don't have any kind of stock in my portfolio like this one, so I'm really looking forward to get this one into the portfolio. I hope I brought you some value. If I did, definitely subscribe to the channel so you don't miss out on any exclusive videos like this. and smash that like button for the algorithm if you haven't already. Also, let me know down in the comment section if you are in this stock already or you're going to get into it in the next week. Or if you think there's something shady, just let me know down in the comment section below. With that being said, thank you so much for watching and I'll see you in another video.